and welcome back to Behind the Money, the show where we talk about some of the most interesting public companies and people. I'm your host, Morris Willie. Like last week, where we covered ARR, today we're covering AGNC in a similar style video. We'll go over the background of the stock, what the stock is currently doing, and potential price targets. So let's begin. Founded in 2008, AGNC Investment Corporation is an internally managed real estate investment trust, REIT, or actually in this case, AGNC would be considered a mortgage REIT. They invest predominantly in agency residential mortgage-backed securities on a leveraged basis, financed primarily through collateralized borrowings structured as repurchase agreements. So similar to ARR, AGNC works under the same type of business model. They both go for mortgage-backed securities and they pay out their shareholders a monthly dividend on top. Next, let's look at how their assets are doing. Currently, mortgage loans are continuing to be repaid as agreed, and right now they're being repaid more reliably than they have been in the past. That's a key takeaway from a report by the Mortgage Bankers Association. The organization says that as of the end of the second quarter, overall mortgage loan delinquency rates in the United States fell by only 3.37% of outstanding loans. That's down from 3.64% a year ago, reaching the lowest level since the Mortgage Bankers Association began keeping tabs on the data back in 1979. And the data jives with similar numbers from the Federal Reserve. The nation's central bank indicates that as of the end of the second quarter, delinquencies on single-family residential mortgages fell to only 1.72% of the loans of this categorization, reaching levels not seen since 2006. While watching Behind the Money, remember, this isn't financial advice and shouldn't be taken as financial advice. This is only for entertainment purposes only. Now, back to the video. Data from CoreLogic further confirms that trend. CoreLogic notes that delinquencies of more than 90 days past due are still seeing the steepest declines. Something else to note here, people that got in on the low interest rates back in 2020, 2021 and have them locked in, home buyers are highly motivated to make sure that they keep their current loan terms intact. It's a dynamic that comes with a footnote, however. The number of mortgage loans being made is also peeling back from recent sky-high levels. Real estate market research firm ATTOM reports home lending fell 19% to 1.25 million loans during the first quarter of this year, reaching levels last seen in late 2000 in the wake of the dot-com meltdown. The quality of AGNC's mortgage-backed securities may be holding up just fine, but it's getting increasingly tough to find new ones to buy. Bouncing off of that, let's look at their book value, which has been diminishing in recent time. As clarified in the footnotes from the ER, the economic return is defined as the change in tangible net book value per common share plus dividends per common share declared. As a result, if the tangible book value remains, then a declining economic return simply means declining profit, and it hurts investors only once. But if the TBV, tangible book value, also declines at the same time, then a shrinking economic return is worse than on the surface. And that is precisely the case with AGNC. Its tangible book value has been in steady decline in recent years, shrinking from $16.39 per share in June 2021 to current levels of only $9.39 per share. Broadening our horizon does not change the picture, as ever since 2016, 2018, no matter when you look at it, their tangible book value has been declining. That in mind though, the share price, as to be expected, the share price has been on par with the book value. Currently, as of last quarter, the tangible book value was $9.39, and as of recording, the previous closing price was $9.68, with their opening price at $9.62. So it's near their book value, so right now might be the time to buy. Honestly, as long as it's getting closer towards the book value, that's when to buy, and as it gets further away from their book value, that's when you sell. Now, finally, looking at Wall Street's estimates, you have 12 analysts covering AGNC, with 6 giving it a hold, 5 giving it a buy, and 1 giving it a strong buy, with the average price target of $10.53, giving it an estimated 9.52% upside just rounded up to 10% upside from this point, so not too bad. I'm gonna let you come to your own conclusions, but tell me below, what do you think about AGNC, and is it a time to buy, hold, or potentially sell? And thank you for watching Behind the Money.